Hey Sam, hello, good afternoon, Ramesh. I missed you last week. Realized you were not there last week. So hope everything is fine because you rarely miss these meetings. I was wondering, is everything okay at your end? Hope everything is good. Okay, I'm not even sure. Oh, okay, okay. At the Sundargand. Got it, got it. Cool. So, what do you have for today? You missed a lot of action. We had uh, yen carry trade and whatnot. We discussed tons of things that generally supposed to happen once in a while. I mean, it was at least I've seen that whole yen carry trade happening or unveiling for the first time. So that was interesting to go through that. But anyway, you can view the recording. So what is for today? What you guys have in mind? Few things. We still have some earnings. I got some stocks last week. We're gonna do a quick, 5-minute review of those stocks. 13F have been coming in, so I spent some time going through the 13F and make it easier for me to review it. So we'll go through those 13F. If you have a favorite fund manager whose holdings you want to know, yeah, we can go through those 13F. There are a few that I definitely want to go through. Uh, yeah, some some update on the crypto side. A lot of news, market moving news coming in the market. My hopes of eating samosas at Starbucks have been crushed because now we have a change in the guard at Starbucks. He didn't listen to me. You know, if you remember last year, of course, it's jokingly, I said, if you're looking for new product innovation, add Indian samosas after Lakshmi Narasimhan joined as a CEO. He didn't do that. So no wonder he's out. So anyway, change of guard over there in on
Vivek,
Starbucks and Chipotle. Yeah,
how could Starbucks make such a major mistake?
he didn't. I don't think that. I mean, there are few things from a mistake perspective. Only one thing which I see him as a mistake was one of the interviews that he did with Jim Cramer, and I think there's another interview.
No, no, excuse me, not that. Getting the recently departed CEO to come on board. I mean, we were talking about it last year, remember?
Yeah, we
And we said,
it is.
you know, so quick a turnover.
Yeah. So it is tough. I mean, it's onto the board of Starbucks. It is also tough if you have a founder and very influential founder still going around, right? So it's the same story we have seen with Disney, with Bob Iger picked Bob Chapek, and then after a year or I think 18 months, Chapek was out. Bob Iger didn't really like how he was running. Even though he had no official capacity as a CEO, but he's an influential and ex-CEO, probably one of the most successful CEO in history of Disney, and he had a lot of shares. He still commanded a lot of voice. Now, in terms of a Starbucks, it's the same story with Howard Schultz, right? Howard Schultz still around. He owns a lot of shares. He's not the founder, but considered as equivalent to founder. The founders were other two guys from whom Howard Schultz actually bought Starbucks, and then he expanded. So, but he's as good as Elon Musk is founder of Tesla. Similarly, Howard Schultz is founder of Starbucks, though
Uh,
technically both of them are not founders. But
no, what I'm bringing up is how could Howard Schultz a year ago make this mistake?
yeah, it happens. And so we will talk about it in terms of now they got a new CEO, Brian Nickel, pretty successful CEO. I've seen it right in front of my eyes. How he has transformed Chipotle as a company and the Chipotle stock. Gosh, when they brought him in, Chipotle stock was about $300 or something. It's like now 10 times, or whatever, 8 times, 9 times in what past 5 years. So they couldn't find anyone better than Brian Nichols. So we'll talk about it. What's the pros and of Brian Nichols, and what are the challenges that he may have to face. So I do have some thoughts on. Ramesh ji says Starbucks is in trouble with union issues. Yeah, there are union trouble. There is a issue that the customers are not getting their drink. Finally, if you look at Starbucks, drinks are so expensive, right? $6, $7 for a coffee. And there's, Starbucks is saying consumer is challenged and all that stuff. So we will talk about it. So hold your questions and thoughts on Starbucks, the stuff that is happening at Starbucks. We will talk about it. Dave says made money in Starbucks and lost in CMG. If you own both of them, it's like, oh, okay, not much of a change. Win some, lose some. I don't own any of those. I was actually eyeing Starbucks, and probably both Starbucks and Nike was on my radar, but I didn't open any positions. Gosh, I was a little late. Maybe I should have had. Anyway, so
Vivek, I could tell you in Starbucks in China, in Shanghai, was from like 2017 going down. And it's not because of that other company, but it was just going down because people were earning less money and less people were employed in Shanghai.
Yeah. So again, Starbucks prices its products as if it is a premium brand. Starbucks doesn't seem to be a premium brand, because people will say, you know what, I don't want Starbucks if I'm challenged. You don't do that with, let's say, Louis Vuitton or Chanel or Hermes. They are a premium brands, and the customer base is different. Starbucks, even though they price their coffee as premium brand, it doesn't look like that the customer consider it as a premium brand. Customer will move over to other brands. So that brand pricing power, clearly Starbucks doesn't have it. So something gotta change. So we will see what happens. Yeah, so maybe we'll talk about the other big corporate stories around Google breakup. So that's yeah, I want to talk about that also. Yeah, Sam says not premium but reputable. Yeah, and there's a difference between being, I mean, it's not bad business, but you can't price it as a premium product when clearly um, customer doesn't consider you as a brand that they will not live without. Looks like customers found better choices and have you know um, basically moved down. Anyway, Ali says this conversation pretty awesome. Oh, thank you. Is this the first time? Probably I thought maybe I've seen your name earlier. Oh, okay. Yo, welcome. So cool. Yeah, we meet every Saturday. Ali, come talk about markets, stocks, anything that I want to bring forth, and anything that you may have in your mind. Just bring it up for discussions. Yeah, that's what we'll discuss. Okay. All right. So those are a lot of I guess topics, things that I have planned for. If you want to add anything, feel free. So let's jump into today's session then, guys. Session number 243. Very soon we will be hitting 250 mark. That will be amazing. I never thought of, when I started, 4 years ago, that we will reach this milestone. Uh, I don't know investing in general is a very boring topic. It's it's not that everyone want to talk about it. So, but I really wanted to talk about it, so I started this, and thank you guys who've been joining in the journey, and helping me to become better investor. And that's all, we learn from each other. Dave says maybe Kava is better than CMG now. uh, I don't know. I mean, Kava is pretty new to the market. I looked at Kava long back when they did an IPO. At that point of a time, most of the revenue growth was coming from converting the acquisition that they had done, and I forgot the name of that company. Uh, uh, so they were converting all those restaurants into kava, but it's what I've heard is that a lot of younger generation prefer to go to kava and sweet green. So these are two new upcoming fast quick service restaurants. One is kava, another one is sweet green. If you want, if you're interested in investing in these QSRs, you may want to keep both of these on your radar, sweet green and kava. I don't know whether they will become the next Chipotle or not, but you never know. So, but I don't have any positions in either kava or in sweet green. I may want to look in kava and both, maybe, want to give them a year before, uh, let them perform in the market, and then I'll look at it. Ali, I wish I got in investing much earlier in my life. It is never too late to invest. I mean, that's what I would say is the best time to invest was yesterday. The second best time is today. So adjust that. Make sure you pick the right um, stocks or ETFs and position size it accordingly. In investing is better than keeping money in your bank at any given point of a time. So it's never late. I started my journey very late because I've been moving around. By the time I landed in US, I already had like two kids. I'm like hitting on the wrong side of 30s. So I've not started very early myself. But it worked out. It works out. So that's my point. Brian Nickel is out. CMT is probably going down the tube. Again, I don't have much insight into what's the bench that Brian Nickel had created while he was in Chipotle. What I heard is the COO, who is now the interim CEO, has been around for some time, and maybe it should still do good. But again, I have no insight into the bench strength on the Chipotle. So probably, I guess it is maybe too early to write an obituary of Chipotle. Of course, CEO has a much bigger impact on the on the company's direction. But once the direction is set, is the lieutenants that carry out the regular operation. So I guess, yeah, I don't know if I would write off Chipotle so soon. Palantir is doing very well. I think, yes, it hit what, new 52-week high. I guess it is above 32 now. We go back and look at Palantir, PLTR. Yeah, I'm proud of looking at Palantir and bringing in and talking about Palantir when it was like $6 last year. Was it last year? Somewhere in January, February. I'm not sure whether it was last year, Jan, Feb, or was it a year prior to that? I guess it was last year, yeah, around there, right? Jan or Feb, when I looked at Palantir again in, I guess, December or January. I owned some shares, kept it as a radar position. And when it went down to $5, $6, I'm like, I want to look at its business again. It probably deserved better valuation than $5. That's where I started looking at, from business point of view, and I found good things. And then we talked about it. I guess it was at $7. And now in 18 months, it's up like 5x. So again, doesn't really matter what happens to a company in 18 months. We continue to focus on a business side. And I reviewed Palantir's earnings. I still find things moving along on the business side. Could stock go down? Sure. It may have been, it's a favorite stock of FinTwit. So you will see a lot of volatility could be there in the stock depending on how the sentiments are changing. But from as long as it continues to perform on the business side, I guess I'm okay. So, and so far it has proven me, the business has proven that the thesis was right. And a happy shareholder of Palantir. I remember my first purchase. I think my initial radar position was at $26, and it goes down all the way to $5, and then you start adding up again. But yeah, you need to have that patience to look at a business. All right. Ali says, I turned 30 in 2 weeks. You are ahead of me. You're investing sooner than I've invested here. So, all right. So let's Dave says, I got impatient 2 years ago on Palantir. I don't know, what do you mean by impatient? You sold off your position, or you like, okay, I'm loading up on Palantir. It could be both ways, Dave. I don't know which side you are referring to. Did you dump your Palantir saying, oh gosh, I'm done with this. This stock is not moving anywhere. And you dumped it. Again, I mean, I had initiated very small position, like a radar position, and I think that really helped me because I have seen some stocks that I wanted to own, but not really, was convinced about it, and I forgot about it. And later on, I only think, I see, oh gosh, that stock has run up so high, so I had a radar position. That's okay. NVIDIA is my goal these days. Congratulations. Between NVIDIA and Palantir, you're still, you're still doing good. You're still doing good. Again, that doesn't really matter. Palantir is not the only stock. There are plenty of stocks that have been a wealth generator. Palantir is just one of them. All right. As always, anything that we talk here is for education. It's not an investment advice. So let's get down to today's session, unless you have some more questions. I don't see anything on the chat yet. Okay. It's been a great week, right? We have all greens for the week. And this is how, sentiment changes. So this week, Microsoft up 3%. NVIDIA, congratulations, Dave. NVIDIA is up almost 19% for the week. All the semis, they got dumped last week, and this was what this position was last week, where NVIDIA was down. I mean, majority of the stuff ended in red, and this week we jumped right back. It's like recoiled spring, right? And again, sentiments changed. Yen carry trade, people realize that, hey, it's not going to be as bad as what they were thinking about, and gonna go back to investing. So other numbers came in, inflation number, right? PCE inflation is now, core PCs are 2.6%, which is below the Fed rate forecast for 2024, which is like 2.8%. So market is, Fed is going to cut the interest rate because the inflation is down. Market is, I mean, depending on who you listen to in the market, there have been chatter of around maybe 75 basis points, 50 basis points, right? 25 basis points, I think, is guaranteed, kind of a market has assumed. But there's been chatter of 75 basis points as well as 50 basis points. So let me just bring up the Fed watch. What does this say? Probabilities. So we're looking at okay, there's a 75. Is it the current one is 525? Why is okay? Oh, so the current is 525 to 550, and the probability in September is 75% probability market pricing in that it will be cut by 25 basis points. 25% is pricing in that it'll be cutting by 50 basis points. By the time end of a year, which is, let's say, December meeting, we are kind of almost half between almost 1% interest rate cut by end of December, either 75 basis points or 100 basis points. So that's what Fed Watch tool is saying. What will Fed do? We don't know. Again, Jerome Powell has maintained very clearly the same stance. We are data dependent, and inflation is down. So now they need to worry about labor market. And I'm really kind of confused in terms of what the signal labor market gives us. Right? Now the jobless claims have come down. So it means that the labor market is strong. But then we had a unemployment number which ticked up, and that spooked the market just before the end, not the previous week, but the Friday before. Think, oh, we might be entering into recession because the unemployment number is going up. I guess these macro numbers change from week to week basis, but if jobless claims are going down, it means more people are getting employed or don't need assistance. Then why should Fed cut rates? I don't know. So, and I don't want to speculate on it. I don't want to build my portfolio assuming that the Fed will cut rate. Even the market is pricing in that we're gonna get a rate cut. We're gonna get a rate cut. Okay. So what happened in so far in August? S&P 500 returns have been positive across all the sectors, not just one sectors. Primarily, the big tech, information tech, and the consumer discretionary have been leading August so far. Consumer discretionary will include your Amazons of the world and the Tesla of the world. And S&P is up like 7% just in August. After the beating that we have taken, now you're back up, right? So, okay, the last week we were just talking about it. Come on, don't worry. It's just a week, after the whole the market tantrum after the yen carry trade. So fine. If you look at year to date, S&P 500 is like 16%. 16% year to date. You don't have to use we don't need to use our brain. We don't need to use any need to read any company filings. All we do is, even if we invest in index, S&P 500, you still get 16% year to date. What's not to like about it? Another one is I want to, this kind of a surprise me, the communication sector. This year, it is up 21.5%, 21.48%. But I was looking at it between S&P and communication, because generally tech and the communications are the biggest, the drivers of the return. Over 5-year and 10-year period, S&P 500 has actually done much better. That was little surprising for me, but that's where you actually dig down. And I was looking at it. Okay, I understand. You got a AT&T, you got a Comcast, Verizon, Disney. These have not performed. Google, Meta, Netflix probably have performed, and that's the reason why over a 5-year period, I think S&P 500 has done better than the communication services sector. Again, if you don't understand on the tech side or the communication side, just do S&P 500. This is nothing wrong. I think that's the best instrument for individual investors, is just invest in the biggest companies in US. We don't have to worry about, is Tesla going up or is Apple going up? Who is on the top of the charts? You will get exposure to these companies which are on top of chart if you just do S&P 500. Right? Those who want more, I don't know whether fun or more volatility, yeah, individual stocks are there, but you can avoid all that individual stock risk by just doing S&P 500. Let me read some comments. Ali, how does NVIDIA keep going up like that? I don't know. I mean, NVIDIA has been around different places. It was up to 140. Now it was down to what, 90 recent times, and now it is back up to 125. So far, over the last 18 months, NVIDIA has performed. in terms of what the market expectations were from a business perspective. Will he still do it? I don't know. We'll only get to know once NVIDIA releases its quarterly results. But market is pricing in as if, there is no end to how, the amount of money that NVIDIA can make. And that's why the stock is going up. People and of course there is a lot of a speculation going around of buying out of a money calls because we think NVIDIA is always going to beat earnings or beat expectations. Right? It works until it doesn't work, and it's all about right now. It's all the tailwind from AI, AI, AI. I was reading yesterday night. I think Huawei has now released a chip called Ascend, specifically for the Chinese companies because they can't get access to NVIDIA chips because of restrictions. But I'm sure very soon they'll start selling to other customers also. But as of today, NVIDIA has got kind of a monopoly on these AI chips. But every and again, I don't know, I shouldn't be comparing NVIDIA with Cisco, but there is similarity between Cisco in 2000 and NVIDIA right now. Both are infrastructure play, both have kind of a monopoly and riding the tailwinds. 2000, it was a tailwind of internet, and to have to have internet traffic to go through, we need routers, networking gear. That's what Cisco was. To run your AI models, you need GPUs. That's what NVIDIA is. So that's what's happening with NVIDIA. Dave is saying, my NVIDIA shares all naked now, added a bunch around 100, will take a profits a few days before earning. Cool. I still hold my 1/3 position of NVIDIA. I haven't done anything. I mean, probably I've sold some iron condor and some option trade to reduce the cost basis, but I'm still holding 1/3 of my position. In hindsight, I made a huge mistake in selling early, but then I'm fine with it. I just need to maintain my discipline of selling if it is egregiously priced. Overpricing, I'm okay with it. But sometimes when things get egregiously priced, I want to, sell some of the shares. But I'm holding my another 1/3, so that if NVIDIA continues to go crazy, yeah, and I have my schmuck insurance. Billions in calls came in last week into NVIDIA. Market makers not going to make it go down for a while. Okay. If we know what market makers are thinking, we wouldn't be here today. Yeah, I don't know how to. Market makers are there to make the markets. Again, these things would matter if we are looking at what's going to happen to NVIDIA after earnings or in a month. I'm just want to look at next 5 years, 10 years. What's your thought on real estate? HDLO think housing market might be slow. That's what if you Home Depot came and said that, right? Their earnings were not spectacular. I think Home Depot had an increase in revenue, barely, maybe 1%, 2%, but that was because they had acquired another company, another distributor last year, and the revenue from that gets added to Home Depot. If you exclude that and do a pro forma a comparison, Home Depot actually had a reduction in revenue for this year. If you do a pro forma comparison, not including the distributor's revenue, and I think the story is the same. Higher interest rates means housing is still a little challenged, and people are not buying. If you are not buying new houses, then you won't be buying new appliances and all that. Number two is people are also postponing their renovations because now they are thinking that interest rates might come down, right? So if interest rate might come down, you will not take a HELOC Right now, you might wait until Fed reduces the interest rate so that you can get a HELOC cheaper and do the renovations that you have been waiting to do it, right? And where do you go if you have to do house renovations? You go to Home Depot. So Home Depot is getting challenged on both sides. Number one, the housing market is still tight because the mortgage interest rates are still high. Number two, because there is an anticipation that the interest rate will go down, the customers, those who have been waiting to do house renovation, maybe they wanted to put a new deck, they wanted to add an additional room, they want to remodel their kitchen, and right now they're waiting, you know what, maybe I'll wait for 2 months to take HELOC and do this remodeling because the interest rates is going to come down in another 30 days, 45 days in September. So I think that's where they are seeing the challenge. Fred says Vanguard real estate ETF is doing well this year. I think the real estate turned positive maybe a month ago. Now it is up year to date. Even if I look at the sector wise, it's now 4.35%. I guess a month or as far as maybe a month or 6 weeks ago, this was the only sector. Real estate was the only sector which was showing up as red in year to date. But yeah, it has turned positive. Okay, what else? My questions about real estate slowing down next year, even with the rates coming down. It's about unemployment. Is it really slowing down or is it reduction due to overhiring during COVID? So unemployment, the other reason of unemployment number going up, it is based on how it is calculated. Uh, what I heard is that when you look at an unemployment number, the way government calculates is how many people are, looking for jobs and don't have a job, right? So in the recent quarter, the recent month numbers which came out 2 weeks ago, it was the fact was that there is a increase in the immigration, and hence there is an increase in the denominator of like number of people who are looking for a job. It's not that the job openings have gone low, but it is the fact that the immigration numbers have increased, and hence more people were looking for a job, and hence the unemployment number went up. In tech side, we are still seeing a reduction in force. I mean, Cisco announced second reduction. Stock went up after they announced another, I think, 6,000 reduction in force. But I think on the other sectors, if you listen to, let's say, talk about Starbucks or even other grocery companies or restaurants, they are still challenged from a labor cost perspective. I think labor is still tight in services sector, but yeah, depending on the sectors that we're looking for, I think it's a tech side. There's a lot of layoffs continue to happen on the tech side. So because yeah, we had over hiring during COVID on the tech, and now they want people to come back. People don't want to come back. That's also another reason. How do you calculate trade-offs between overpaying mortgages of investment property home versus investing in stock market? I am actually not a big fan of, me personally, I'm not a big fan of investing of a property investor. I don't want to be a landlord. Reason is, because I am active on the stock market, and I think it suits my style of investing. Property becomes illiquid, and you can't sell a portion of it if you want it, and then you have to deal with being a landlord, deal with a renter and all that stuff. So just doesn't suit my style. So I don't have any investment property. My wife keeps telling me, why you invest so much in stock? You should buy a property. It's a great investment. I said, go for it. As long as you can manage it, go for it. I don't have any issues. It's just that I don't want to deal with the hassle. And let's say if I want to buy a new car, I want to take out $50,000. I just can't sell one room, or I can't sell a bathroom if I invest in property. But if I'm invested in stock, maybe I'll sell a portion of my stock, right? So it's much more liquid. It is much more easier to sell. The pricing you get, it's so cheaper transaction wise. So me, I am better off on the stock side than on the property side. So uh, yeah, each individual have to look at the trade-offs depending on your style of investing. For me, I think stock market is much better. That doesn't mean to say that the real estate investment is not a good investment. Uh, it's a great investment if you can, find, if you have the right temperament and you know how to find the right property. And number two, it is great investment because you can get leverage. So if you compare with unlevered returns from a real estate versus stock handsomely beat the returns. But because you can get a leverage when you're investing in real estate, that's where it becomes much more attractive.
Absolutely, Vivek, you hit the nail right on the head, and definitely, they're two different vehicles altogether.
Yeah.
You can't compare them, and this is your housing needs are different, and you can have a portfolio of other investment properties. And of course, you continue to invest in the side. You need to know your risk profile. And well, I can just add one thing. I mean, the kind of tax incentives you get on the real estate side is no merit matched on the stock side.
Yeah, you can deduct your, so tax incentive, you like deduction of your mortgage interest, right?
Mortgage interest deduction, and plus, a primary home, you can always, or every 2 years, any appreciation up to $500,000 is capital
Okay.
gain tax free. I mean, which other investment would give you that?
If you sell, yeah.
And
Yeah. So there
yeah,
are pros and cons of each of the investments. Just that I have not invested any real estate as an investment. Maybe once my portfolio becomes much bigger, where I don't mind putting in, I'll do it. But
I
yeah,
need to
there
have
are
a
pros and
conversation with your wife. Definitely would like to come down. Yeah.
cons. Yeah, she keeps telling me, you keep investing in stock market, and it keeps going up and down. I'm
Yeah.
like,
You provide the capital, the down payment, and stuff like
yeah,
that.
I'm
We'll
like, you
provide
want to
you
manage
a
it,
nice
you go ahead and manage it.
dividend kind of cash flow every month from the investment property. Yeah, we'll do that. Thank
Yeah.
you.
See, I can generate my cash flow by selling options against the position I hold. I can get enough leverage because I get a portfolio margin on my stock account. So I pay like only 15%. So I can get those things that and it's no, I mean, much less hassle for me. Again, I have friends, I have in family those who invest in real estate. It's just that I am not big into real estate investing. Dave, so that means
Thank,
there's still a lot
thank
of a
you.
cash on the.
Just to complete that. So, second part, even if someone wasn't into additional property investing, just still against your home mortgage when you are, for those who are whatever at an earlier stage in life, still have some sort of a mortgage against their home, would they any thoughts around making that decision, overpaying mortgage versus investing in the stock market?
So this is a very, I mean, just from a numbers perspective, right? So investing is always numbers and emotions. So today, again, it depends on what's the mortgage interest rates. If someone is holding, let's say if someone's mortgage interest rate is 5%, 6%, right, which is higher than what the treasury bills are paying. In that case, maybe I'll try to pay off every month some additional principal, right? Again, it depends from person to person.
Yeah, I mean, if I might take that, Aditya, this is a great financial planning question you're asking. I mean, should I put more money to work in the stock market or should I pay off my mortgage?
Yeah.
Again, it's not a very simple answer. It's not very complicated as well, but you need to sit down and kind of see numbers, what you're comfortable with, stuff like that, and the overall portfolio mix. I mean, you're trying to build a legacy, build wealth over a period of time using various vehicles, stocks, bonds, mutual funds, real estate, and how it all come together. You need to take a snapshot of that they're pretty decent, certified financial planners who can help you do that. You can start the process yourself, but this will not, a 2 hour meeting out here without knowing the facts will not be able to articulate you in one particular direction.
Yeah, very well said. Thank you. But
I-
again, keep in mind that things that look good on Excel may not work out in the life. So especially when the mortgage, because I myself get challenged with it, and I used to, even though I'm active in stock, I used to pay off my mortgage additional principal. Every quarter I'll used to put it down until the fact that the treasury bonds or T-bill started paying more than my mortgage, right? So that point of time I decided, you know what, I'm not gonna put down any additional principal every year on my mortgage, because now I can put that same thing on the T-bill. On things that, I mean, and again, you could call me stupid saying, hey, stock market returns what 8 to 10% on an average, and I know that, but it's a little emotional decision of, I just don't, I want to, get rid of that mortgage. So even though I know the returns of the stock market, my mortgage was like 2%, and I still used to pay off little by little, right? So it's a emotional decision. That decision look horrible on Excel, but
Yeah.
it helps me sleep well.
Yeah, I mean, could just follow up, Shaimin, Vivek, just if it could be a couple of seconds. So, Aditya, there are ways to do that. If you're paying instead of monthly, you're paying bi-weekly mortgage, you end up paying 13 months in a year. So you're paying additional towards make sure you pay towards principal. It seems if there is a mortgage is 15 years and you're paying bi-weekly, you might end up paying everything within 12 years. And I think Susie Orman says there's one more calculation. If you have a 30-year mortgage, you're making one extra month payment every year. You're planning to come. You can cut it down as much as to 22 years as well. So again, it depends what you're trying to achieve, and taking a look at overall what your portfolio, what your installments.
So Jay, one, I want to caution on this paying bi-weekly versus monthly, because when I initially took my home loan, I also thought that.
Yeah.
But you have to make sure that whoever is servicing your loan actually pays it off, because what happened was I'll pay it off bi-weekly, and then whoever my provider was just holding that money, and then I'm like, why am I paying it off if you're not kind of reducing or if it is not going towards the payment? So then I start paying it. And then I was talking to my friend, mortgage broker friend. He says, yeah, you have to make sure that that pays down your
Principal
mortgage
amount.
and not
Goes
just
towards-
holding it off. And then I realized, oh gosh, I did it for like say 10 months. And then I realized there is no change, because it was just a prepayment and not yet being applied to the mortgage. So you have to just make sure that's you look into that issue. And
Excellent.
then I start paying that bi-weekly. All right.
I appreciate that. Yeah, I have a similar approach, so thank you.
If your
What
interest
about-
rate is high, probably pay it off. Yeah, if it is 30 years, if you're at below 4%, you'll be okay. Yeah, this is very personal decision. I don't think there is any right or wrong answer, because when emotions get involved, when your sleep get involved, just Excel doesn't Excel is not enough. House rich and money poor. Yeah, there will be folks who will be house rich and money poor.
I mean, this is the stock portfolio would not give you calls for leaky toilets or anything at night.
Exactly.
And the same token, the real estate value are not like an ETF or a stocks, which will come August 2nd, jump up and down 20-30%.
So
That might
no,
put you peace of mind.
so I think even if the value jump up and down, there is no way we don't have any way to know about it, and then hence we won't worry about it. The problem is not that the stock market is going up and the problem is that we log into our broker platform and want to check what's happening every minute. That's a problem.
Yeah.
So if we had gone out in July and been on vacation, I didn't open your brokerage platform for last 3 weeks, life is still great. The problem is that we open it every day and then we get carried via that yen carry trade and then realize and then make a stupid decisions of in emotions. Anyway, Fear
So,
and greed index still.
Vivek, one more question, please.
Sure.
One more question. So is there a way to pay off just the mortgage interest? So far, I don't know if there is. But just the mortgage interest by itself. Not it should not. I mean, if I want to pay more, if it's possible to just pay off interest I
Principal.
mean, rather than principal. I mean, you have to add to the principal also because you cannot just pay off interest as such. Uh, but if there is a way, because I want to save on, let's say, tax on the income tax. I want to see if I pay more on the mortgage interest rather than paying more on the income tax, if I can
Mhm.
save
I'm not
more.
aware. No, I'm not aware of that you can pay off your interest because your interest depends on what's your principal due. So I don't.
Right.
Yeah, I don't know of that you can just pay off your interest.
Uh,
I think Alfred said, yeah, there is interest only. Okay, so he's saying that there is interest only mortgage plan in
mortgage
which
plan.
you pay down only interest, but that's going to be really expensive. But I don't think that was
Okay.
your question. I think your question is, I already have a mortgage. I don't want to pay down principal.
I
So you
mean,
could
I'll
convert it to
pay the.
interest only mortgage.
I want to save more. So the question is, I want to save more. If it's possible, I want to save more on the income tax. So rather, I would see if the math makes sense. I would see if the mortgage paying more mortgage interest can that direct my amount from the income tax.
So Jay is in real estate, and
Okay.
thank you. He just
Sure, sure.
mentioned there.
Sure,
Reach
sure, sure.
out to him.
Thanks, Vivek. Yeah, thanks. Yeah.
Okay. I'm not a. I mean, yeah, there are interest only loans. If you take that,
Sure,
then
sure.
I think it's possible.
Thanks,
Yes,
man. Yeah.
if you can text me some numbers separately, we can take it off. I work with different lenders. There are a lot of programs, but we can take it a side discussion later.
Sounds good. Thanks, man. Yeah.
Cool. All right, so let's look at some stocks. And these are the ones that I think last week you guys gave it to me. One was RNECY. So Sam, you are requested for RNECY. RNECY doesn't even trade on exchange. It's only on OTC. So I don't have any financial information on RNECY. So unfortunately, can't do much about it. So I'll just skip that one. Viking Therapeutics. So Viking, Fred had asked for Viking. So let's do Viking Therapeutics. Let me just bring up the document VKTX. VKTX. Alrighty. So again, it's that same, and I can take a request for 5 for the next week. So if you want me to look at quickly some stocks from financial perspective, I need 3 things. Ticker. Number 2, who's the CEO, name of CEO, and the market cap. Okay. So keep that ready. So what is Viking Therapeutics? Again, I don't know what this might reveal. So it's a clinical stage biopharma company focused on metabolic and endocrine disorders. Okay. So it's a biotech company, clearly an area where I have zero expertise. Looking at the TTM numbers, PE ratio looks like no earnings. That's why no PE ratio, net income is negative. That's fine. These are biotech companies. Huge amount of cash. What's the revenue? Any? No revenue? Okay, so I don't think I can do any financial analysis on this company because it's got no revenue. So it's a pre-revenue company, which is it's a biotech company. So it's a pretty standard procedure for any biotech company is to come IPO, raise money, and continue the R&D for whatever products that they are focused on. And I think that's what Viking is doing. So they got a zero revenue, $6.28 billion market cap, which is, hey, because the shares are listed. So no gross margins, etc. Nothing, no operating margin because they don't have any revenue. So I need to fix these errors, but looks like that's the case. So I don't think there is anything I can talk about in terms of is it from a numbers perspective, is it a great business? Is a good business to own or not? Because there is no revenue to talk about. So it's all about story. And like I said many times, investing is half revenue, half numbers, half story, right? In this case, if you're I think Alfred had asked for it, right? If you're investing in Viking Therapeutics, it has to be based on the story that you are seeing in this company. And I have no idea in terms of what products they are working on, what's the competition, what level of what's the level of a clinical trial stage. Are they on number 1 clinical trial, number 3, where they are? I have no idea about it. So you need to know that story for investment. The numbers doesn't mean anything. And I think majority, the modus operandi of many of these biotech companies will be once they hit a particular clinical trial level, they'll probably be bought up by one of the bigger pharma companies, right? And that's where you get those huge jumps. And I'm seeing these whole buyouts happening a lot more nowadays because the bigger pharma company, publicly listed company, they don't want to spend billions of dollars in 10 years, 15 years in just trying to do R&D, which basically is a drain on their EPS. They would rather buy a company that have been spending on it. So that I think that's what it is. So there's nothing, it's all based on a story. And I don't have a good information on what Viking Therapeutics do. So that's on Viking. Dave says VKTX, I'm taking out profits. They thrive when Lilly will down. Okay. When Novo Nordisk and Lilly are down, VKTX is up. How can the market cap be in the billions without any revenue? Because it's all about story. Right? It's people are believing that whatever products that they're working in, they'll be successful, maybe in the future, and are ready to pay upfront for that company. Right? So at the end of the day, the stock enables the holder of a stock the claim on the assets and the future profits of the company, right? So one is around the current assets and whatever in future they're going to generate. So currently it does not have much, but looks like market is fascinated about whatever the story of future growth or the revenue will be. And that is why they're still willing to pay $56 for the stock price, assuming that, the future is bright. So you really need to know the story behind it if you are an investor or want to be an investor in Viking. I am not big on biotech and I don't know what Viking do. Okay. All right. So Viking is out. Let's look at the next one. We have LRCX, Lam Research, Ravish. Ravish is here. Okay. Yeah, Ravish is here. So let's go through LRCX. Okay, this is like I do a 5-minute, 10 minutes review, 5 minutes review of a company, right? Not a deep. So I don't have the story behind this because if I don't own the stock, I don't know what exactly they may be doing. So you have to bring the story. I'll bring the numbers. So what is LRCX? It's in I know that it's in a semiconductor. It basically makes equipment for semiconductor. It looks like a supplier of wafer fabrication equipment and services, designs, manufacture, market, refurbishes semiconductor processing equipment used in fabrication of integrated circuits. So right now, every semi stock is on fire because of AI and the demand of chips. Whether these are NVIDIA chips or whether these are ARM chips or whether those are AMD chips, you will need machines to create those chips. And one of the company in the value chain, there are many companies, is Lam Research. 30 PE ratio, of course, because right now semiconductor is on fire. $14.91 billion of revenue and with net income of $3.8 billion. market cap is 113, enterprise value is 115. So a little bit of a debt on their balance sheet. That's fine, not too much. Free cash flow per share is $32, which is great. Yeah, so let's look at 1 year yearly number from a good high quality business perspective. They got a 44% gross margin, good. Okay, ROI, return on investment, is pretty good, and they also pay a dividend. Nice operating margin. I mean, 30% operating margin for a manufacturing company is great. If it was a software company, I would say, that's not good, 30% operating margin. But for a manufacturing company, it's a good. And even net profit margin is 26%. Now, this is last 1 year data, means starting from 2023. Let's go back last 5 years. Story doesn't change. I think still I see a lot of goodies in it. So from a number perspective, let's look at all averages. From a valuation averages, they all look fine to me. Right? Let's look at last 5 year worth. Yeah, so still fine. And let's look at, wow. This is basically, if Buffett would want to invest on it, what are the things that Buffett looks at it? Again, Buffett doesn't say it, but if you look at his investment, you'll figure out, what are the things that he may be looking at. It's all green, all red, I think very few companies I've seen which comes up green across all these parameters, like good gross margin, low sales G&A margin, low R&D margin, depreciation less. So look at last 5 years, looks like they had some debt. That was a concern. Other than that, I think it's a good business. Now the question is, business is good. And again, 2024 data is not in it. I'm still working to figure out how to get the recent quarter numbers. But this is based on 2023 data and backwards, right? So financial year 2023. This seems to be a good business. Now the question is, what is that we are willing to pay for this company, right? Last 5 year average is 17.41, right? P average. Today it is 30. And today it is trading at almost double of last 5 year average. And it is because there is so much of AI tailwind that all the stocks are being bid up. So now I really want to look at, if I want to look at this valuation, I want to see what is being priced in already, right? So last 4 quarters of free cash flow, almost $4 billion. And what's being analyst growth estimate, average growth estimate for the next 5 years is revenue probably grow at 6%, EPS 12%. Let's say if they convert all their EPS into cash flow, I'll take a middle one. Let's say if it is 10%, it is still expensive. Let's figure out how much of a free cash flow growth is already priced in. 15%, 14%, 13%. Yeah, get close to 871. So what's been priced is that it will continue to grow its free cash flow for almost 13% per year for the next 10 years. And beyond that, it will grow at 4%. Now, the question is, once this AI tailwind goes away, will it continue to grow free cash flow at this particular rate? That's something that you need to think about. From a business perspective, it's a good business. All the parameters look great. The question is, could we be paying up too much? That's something we need to look at based on how much free cash flow can it continue to generate, which is about future. So you just can't take the decision based on just the numbers, right? So last 5 years of free cash flow, if I look at, they have grown it at an average of 14%. So 13% may not be too much out of bounds. But what if AI tailwind, the wind goes out of AI, and they don't see the demand for their machines as much as they have seen now, then that could be trouble. I mean, you don't have much of a margin of safety based on where currently the share is priced in. So that's LRCX, but looks like it's a good business. All right, Ravi, if you have any question, do let me know. I'm going to the next one. Okay, next one we had ELF. Pets had asked for it. Do we have pets today? No. Okay, I'll skip that one. Visa. Who would ask for Visa? I think it was Sridhar, right? Do I have him? Who joins with the name of iPhone? If I recall, I think it was Sridhar. Okay, he's not here, so I'll skip this one. Okay, Alfred says, okay, please go ELF. All right. Do we also? Okay, let's do ELF and V. ELF. So ELF, they reported the quarter, so I think we have a second quarter data in it. Let's bring ELF. Okay, I don't know what I'm gonna find, but ELF is a beauty company, less like maybe like Ulta Beauty. It's offer clean, vegan, cruelty-free cosmetics and skincare products. Okay, so clearly I have nothing to do with the products of this company. I'm not a user and I'm not a shareholder also. But let's see how this company is. P ratio 75. Okay, pretty expensive right now. 1.13 billion of revenue and net income of 1.22. Do I have the right data? Because that seems, it may be true, who knows? So let me just make sure that it's not some other company's data. Okay, cash equivalents $100 million, total debt $8 billion for market cap, and enterprise value higher than market cap means they have a net debt on their balance sheet, which we know that $304 million is a debt, but pretty expensive. Just looking at 12 months number, pretty expensive. Okay, let's see the other side. So there looks like their annual financial year is from March to March. So we have very recent data as of March 2024, going back last 1 year. It is, yeah, gross margin is high, but the overall, if I look at operating margin, 14%, it is a retailing company. So I think 12% net profit margin, 14% operating margin, still okay. Retailers have lower margin unless they have a brand, a pricing power. So looking at the valuation perspective, pretty expensive. I think Reitner's trading is pretty expensive valuation. Let's go back and look at 5-year worth of data. The picture doesn't change, right? It's a low teens margin business, which is fine because it is a retailer. Look at a valuation perspective, it's been pretty expensive always. Right? Let's look over here. Yeah, it is being trading at a pretty expensive valuation for a retailer company. That's my only concern, right? I don't want to pay up like 70 PE for a company which is a retailing company. And over last 5 years, yeah, revenue has grown at 33%. It's not growing revenue at like 50% or 60% like some of the software companies would grow. Yeah, so market capitalization, interesting one. Revenue grew at 30% CAGR over last 5 years. Market cap has grown to be 90% CAGR, right? So that should tell you something. Market has run up far ahead of its revenue growth. Maybe have they cut the cost? Doesn't look like to be, because operating cash flow is growing only at 5%. So I think pretty expensive from valuation perspective. So that's my concern. Last 4 quarters of cash flow is $40 million, and average CAGR cash flow has been growing at last 5 years at 5%. Right? Let's see how much is already priced in the stock right now. Wow, this is so current stock price is assuming that it's continue to grow its free cash flow by 45% for the next 10 years, whereas the average is like 5%. I think even if you look at analyst estimates, revenue growth is 21%, EPS growth is at 34%, 45%. I've not seen any company growing it. So I think it's a pretty expensive valuation right now. Yeah, if I'm interested in this one, I would rather wait for a better pricing to take position in this. It's trading a pretty expensive valuation right now. All right, so that's ELF. Let's do Visa. That's the last one that I had on my list for today. Let's do Visa. Oh, Visa's Q2 is already out. So we have the okay, sorry, I opened the different. It's VKTX, not Visa. Where is Visa? Okay, there we go. Yeah, if you have other stocks, I'm ready to take a request. Again, I need 2 things: CEO name and the market cap of the company. Okay, all right, let's do Visa. I don't think I need to go through what Visa does. Everyone knows what Visa does. P ratio 28, not super expensive, and the S&P is trading at 23. 28 is not very expensive for a good business, which we will see. Forward P is 24. It means as equivalent as S&P. Revenue $34 billion and net income of $18 billion. Wow. That's like 50% net income margin. Right? And we know what Visa does. Visa is basically connects you with, basically it's got a network. They don't have any risk. They don't issue the cards. The risk is on the banks if the customer doesn't pay, but they are like intermediaries. They're a network, right? Connecting merchants with the consumers. $16 billion of cash and total debt is $20 billion. I'm not too concerned on this total debt because it's such a high net profit margin business that they are probably generating good amount of a cash that if they want to pay off, they can pay off the debt. Market cap is almost $500 billion market cap. Free cash flow $9, which is fine. So let's look at from a company's from a quality perspective. Is this business, how good is this business from a quality perspective, right? Checks all the boxes, guys, except that it is very small percent is owned by the owners, but that's fine. The company has been around for decades and still okay. Revenue growth 11%. That's fine. I mean, it's already growing at it's a $34 billion. But checks all the boxes. Let's see if it is anything to do with just 1 year. Let's go over last 5 years. All good. Yeah. So looks like still a good business to own. Let's look at some other pillars which include our valuation and all that. Last 5 years. Except that it's been a little bit expensive. And I guess it is because during the COVID, all these cash less payment companies were bid up higher. That would have brought up the PE averages. Other than the valuation, I think everything looks good. They are also buying back shares and reducing the share count. Right? So share change on an average is negative, means they're buying back shares. It pays a little bit of a dividend, 0.68% average dividend for over last 5 years. Yeah, maybe 0.8% for the last 1 year. So it pays dividend. It is buying back shares. So good capital allocator. But today's my lucky day. Like all these companies are all greens on Buffett rubric. Wow. So this is the second company that we find today. Visa, 80% gross margin, right? And EPS is growing 18% last 1 year. Let's say, let's get a 5-year worth of data. It's still 14%. Right? Revenue grew at 10%, market cap grew at 7% over 5 year. So it's not that it's egregiously priced. It's growing in line, right? So yeah, looks like it's a great, good business to own and probably decently priced. So let's see how much of a revenue, how much of free cash flow growth is priced in already. Let's start with 10%, 15%. Yeah, so close to 14.5% free cash flow growth is priced in. Next 5 years estimate is revenue 10%. Analysts are expecting an EPS growing at 16%. Right? Last 5 year, they've grown their free cash flow at a CAGR of 10%. It's 14%, maybe a little bit, on the higher side, but then they are also buying back shares, etc. So I think it is, to me, if I were to make it, this is normally priced. Okay? But it is a good business to own. Okay? Let's go to last 10 years. Numbers look not bad. Numbers look fine. It's a good business to own. So again, because it is the kind of business that Visa and MasterCard are in. Those are like low capital intensive. You just create a network and then you enjoy the growth. So even for last 10 years worth of a data, looks to be fine. So yeah, good business to own. And I think right now it is fairly priced. All right. So what did we get? Stock one for the next year. Oh, sorry, not next year, next week. I'm going through the chat message. Toast. Dianka says, Toast. You have to give me the. I'll go through that maybe later, but give me the CEO and the market cap. Okay, I won't waste time in going through all this. I'll go through the chat later. But if I don't have the name of the CEO and I don't have the market cap of the company, I'm not going to review it. Okay, you know the drill. All right. So let's look at earnings next week. Which companies are reporting earnings next week? Palo Alto. This might be, causing on cybersecurity. Maybe tell us something about what that cybersecurity field is feeling like. I don't own it, but maybe I'll look into its earnings. Okay.
It dipped from 370 to 260. I think when Nancy Pelosi's husband bought it.
Palo Alto has its own challenges around trying to become a platform, where it is a hodgepodge of a lot of acquisitions. So they're trying to stitch together and create the platform story, which is what CrowdStrike has done so well. So I think that's where their challenges are. But we'll see.
Whenever the politicians are involved, that stock is very, very volatile, risky.
So I guess there was an ETF created based on Nancy Pelosi, and there is probably a website if on a Twitter, or there is someone on a Twitter who tracks this. If you want interested in that, you can follow that person.
But definitely go with this Palo Alto network. It can either go 370 again to fill the gap, or either it will again go to 270.
Yeah, we don't know. So we'll see what happened. Again, I will have no comments on the share price. I'll look at what the business, how the business has done on that quarter, and give you, hey, what the share price, how it changed. Right? My main focus is to look at how the business has performed. Share price will take care of it itself. Nanox I hold in portfolio, so I probably spend time. Again, this is a pre-revenue company, just like Viking was. It's all about story, and I know the story behind it, so that's why I hold it. Xpeng, it's a Chinese EV company. I hold in my portfolio, so I will review this. What else? Nothing interests me here. So we got a lot of retailers reporting earnings: Target, Macy's, TJX. We will probably get little more story around consumer health. So far, there have been, depending on which company you're listening to, consumer is doing great, which is like Walmart. And for Starbucks, consumer is not doing good. For Home Depot, consumer is not doing good. It depends on which customer segment are these companies selling. Yeah, when consumer is being pressured for the funds, they will go and shop at Walmart. They will trade down. So I don't know what Target might bring. So if Target brings up a good result, then clearly Target is little higher price than Walmart. Then clearly consumer may not be as challenged. We'll see. Zeekr, nothing that I own. Wow, Snowflake, Zoom, don't own any of these. TD Bank, Baidu is another one that will be on my radar. Another Chinese company. I guess that's it. So these 4 probably will be that I definitely want to review it for next week. All right. So what did I buy or sell this week? Yeah, there are a lot of changes that have happened. And one second. So I do want to share. Jumia, I filled my coffer again. If you recall, Jumia went up like crazy to $13, $14, and I shared you my thoughts of what I want to do with it. Sell some, convert some from a stock to a equivalent option position, and then the remaining portion keep selling covered calls at much ridiculous prices. Stock has come back down on earth, which is fine. So I refilled whatever the stock that I had sold around 13. Now I bought back those number of shares back at $5. So I bought a little bit of a Baba, JD, little bit of a Mercado Libre, Google, Air, and these are like just plain stock buys. Airbnb had a short put spread which closed in the money. So closed. I closed my short put spread, bought a little bit of shares. Same case with Disney, same case with Amazon. Again, these are not the recommendations. Don't go and buy because just I bought it. I want to share what I bought or sold because we talk about stocks, and I want to be transparent in terms of what I do on week basis, right? Not a recommendation. I sold Adyen. And I talked about Adyen last year when the stock had fallen down from 40 to, I guess, somewhere from 40 to, I guess, $10. It's over here. I think ADYEY. So, no, yeah, I think this is where it had fallen down 40% after their earnings, and I reviewed the company. I built my own thesis and added it. Now this week, I sold all of my positions in Adyen, right? Again, I'm not bearish about the company. Don't get me wrong. So I'll share my thesis of why did I sell it, and it depends on to you in terms of if you really want to hold it or not. StoneCo, same thing. You guys know I was cleaning up my portfolio. StoneCo was really complicated structure when I read its annual report. And I've been selling at the money covered calls. And eventually the last portion remaining stock, I sold it off. Apple, I sold some stock because I had a short call that I've been defending for last 2.5 months. So eventually I had a short call at 200. Overall, I think premium I've taken up after all the rolls was around $9. And stock was trading at 212, 213 whenever I closed the call. So I closed the call and sold the shares. SEHD, I sold some shares and opened up a short put. So these are the stock changes that I've done over the last week. Okay. Again, I want to go through and give you my reason of Adyen. Don't think that I'm a turned bearish on the company.
Oh, reason for selling Apple also one reason.
No, reason I had a short. So this is the Apple which I bought on my options account because I'd sold a put a while ago, which got assigned. So I kept some shares. I own Apple in retirement account that I haven't touched. And then I sold a call against it. And then I've been collecting premium on the call and I've been, rolling it until I said, okay, no, I don't want to roll any further. And then I closed the call and sold the shares. Right. Just that. I'm not bearish on Apple. I still hold all the Apple shares on my investment account. This one, I got assigned to me at $175, sold it at whatever, 212 or 213, right? So Adyen, company is still great in the area in which it operates. Adyen, if you guys remember, it is in a payment processing. It's a leader in Europe, now making a moving to US and trying to gather market share in US. So this is my reason for selling. The area itself very competitive. You guys know, I mean, there's a fight over every penny when it comes to payment processing, right? It's a low margin, high volume business. We have a lot of players in it. Stripe is there, Marqeta is there, JP Morgan is there, PayPal is there, Adyen is there, of course. And Adyen is the biggest player. The more that Adyen has, which I talked about, is everything is in-house. They don't stitch together different technologies from different vendors. And, if you go on Adyen, you probably get logged into it. And here's my thing. I don't know how long this moat they can sustain over a long-term perspective. Number two, I didn't see anything else Adyen diversifying into other revenue stream, right? Like, let's say, PayPal is also a little bit into the crypto side of the house. They're also doing advertising and all that stuff. Square has got a, Cash App. They also have their credit card. They have additional revenue streams. Right? I didn't see that Adyen. Surely, if they start moving into, loans, capital, or accounts, they do have a banking license. Maybe I look at it. Right now, they are all about payment processing, in which they are leader. They're a very good player, but I have my own concerns on how big can this payment processing, how profitable can this payment processing be in itself when there is so much fight over margins, in this. So that's number one, is the company is great, but the space in which the company operates, is that attractive enough from a business perspective, from a margins perspective, right? Number two, stock is not optionable, right? So if I buy the stock, which I bought it, I just can't reduce my cost basis, like I've done on all my other stocks. So even if I want to give a time to Adyen to diversify its revenue stream, I just have to wait and watch and be dependent on whatever market does, right? So I can't reduce the cost basis. So that's another reason why I like. Number three is I don't think that at any point of a time I will make it a bigger portion of my portfolio, right? I will make it as like more than 2% of my portfolio. So it will always going to be a smaller portion of a portfolio because the space is so crowded. And if that's the case, then I said, okay, you know what? Maybe I can find a better use of the same capital into some other stocks. That's the reason I sold Adyen. It's not that I'm bearish on the company. It's not that the company business results have gone bad. In fact, I sold it before earnings. I didn't even realize when the earnings is because it's such a small portion. I had opened up a initial portion, what you call initial position in the company. And after result, it went up like 12%, right? So maybe they've done great. But just that I don't have a concern on company. I just have a concern on the segment or the market where it operates. And maybe I think I have a better opportunity somewhere else in other sectors. And that's why I sold Adyen. So that's because we talked about it, and I just want to give you the reason of why I sold off. It's not a ding on the company itself. Company, I think, is still good. Management is still good, but just that you know, you are bound, restricted by the market in which you operate, which is where it operating is your payment processing. Okay, so that's my spiel on why I sold Agile. All right, see some comment. Is crowd woes over? Time to go long or continue to short it? I never short crowd. So I don't think, I mean, CrowdStrike is reporting results maybe not this week, probably next week. We'll see what the CEO has to say, but I'm not too concerned about the financial implications from lawsuits, etc. Could the current fiasco of CrowdStrike push some of the customers to look at more than one vendors? Maybe, but I don't think in a long term, it should matter much. So when when the news came out and the stock fell down, I had sold a put spread 250, I guess 230, and the stock was down to 225, and then it ripped back up. So just before it was expiring on 16th, so it became profitable, and I still hold CrowdStrike. I don't have a huge concern on it. Are you optimistic on Chinese stock and economy? I'm optimistic on stock. Economy, I'm not really sure in terms of macro what I can say about it. Right? But the stocks are trading very, very cheap. So even if the sentiment correct for the Chinese stocks, they should just see a correction in the multiple, right? Even if the business doesn't change, if the sentiment changes, the multiples will revert back to where it is equivalent to, let's say, US companies. We should see a nice jump in the Chinese stock holdings. They are currently given like as if a dead money, right? Do you use any tool to track all your performance because of more than one investment account? No, I just have my own stuff. I don't use any other tool. Though I worked for a company, I spent a decade in a company which aggregates all your accounts and give you a full picture. So if you want, I know some of the banks that I was dealing with who were our customers will allow you to do it. Fidelity, Bank of America. So that worked if you're only, I would say, very beginner, just trying to set your financial life, do some budgeting and all that. And I had my best time in that company, spent a decade building those solutions. But the moment I became more serious as an investor, I realized, that's not, that tool lacks. And I don't know of any other tool, not Mint, now Monarch. None of the banks does a good job. So you have to build your own. All right, what else? Let's look at some updates from crypto side. So because now 13Fs have been coming in, we can get more information on what are some of the funds doing on the crypto space. So Norwegian central bank. So there are some Bitcoin exposure via MicroStrategy shares. Some of the information that we got, couple of central banks, they own MicroStrategy share. And if you know MicroStrategy, has nothing to do with its analytics business. That's how the company has started. But now it has become a proxy of exposure to Bitcoin. So if you see anyone buying MicroStrategy share, it is not because they are bullish on their analytics business. It is because they want exposure to Bitcoin, right? And so we saw Norwegian Capital owns 1 million shares, Swiss Central Bank Barclays owns 60 million worth of shares. Bitcoin on balance sheet, institutions are still coming. 1924 holders, and these are institutions because they have to file, do a regulatory filing with SEC. That's why we know that these are the institutional holders. Last quarter, there were only 1479 institutional holders of Bitcoin ETFs. Now we have an ETF, so it's easy for anyone to take exposure. So that's like 30% increase in the number of institutions that want to hold Bitcoin ETF in their portfolio, right? And this is as of end of Q2. After June 30, things could have changed, maybe. That we don't know. So, other question?
Some big, no comment. Some big investor went in deep in like I don't know, few hundred million into Bitcoin ETFs recently. Sorry, I got rid of the article.
Okay. Yeah, so it is possible. Again, you really have to look into who those are and what could be the motive. Because I also read some of, I think, Goldman Sachs. There was a lot of news around, oh, Goldman Sachs is getting into Bitcoin. They bought I think, IBIT, some $400 million, or was it some other, one of the big Wall Street firms, right? Now, the question is, are they buying it because they are a market maker and hence they want to hold the position? And this is as of June 30th, Q2. Maybe if you're a market making operation, you could just, next day, you could just sell it, right? Or are they actually buying it because they want to hold it on their portfolio, right? So that's where you need to look in. But in any case, I think these are the ones which are like hedge funds, family fund offices, etc. 30% increase in institutional involvement is, from any metric perspective, I guess it's a good number, right? Institutions who allocated in Q1, they either held or bought more, right? They have diamond hands. They are not like retail investors who will dump because the stock has gone down 10% or the Bitcoin has corrected and is down 15% or whatever, right? They'll still hold their positions. Hedge funds are still the big players, right? Look at the top holders of ETF, Millennium, Schonfeld, Boothbay. But there are a large number of advisors, family offices, and the select institutional investors also. Right? This is a tweet from Eric Balchunas, who is a seasoned ETF analyst at Bloomberg. 1,900 plus holders, absolutely insane. There are 350-ish ETFs launched this year and probably have less than 100 holders reported between all of them. And the Bitcoin ETFs have got 1,900 holders, which is insane, right? So other thing, institutional wise, was Morgan Stanley. Now they have told their advisors that now they can solicit investment into Bitcoin ETF. So because maybe their risk department has done all the analysis and now they've approved it for their financial advisors to go and solicit investment on this. And I think Morgan Stanley is the first wirehouse which is doing it. I guess it's a matter of time before other wirehouses like UBS, JP Morgan's, Bank of America do it for their financial advisors. So till date, it was on like, if you are a customer of Morgan Stanley financial advisor, if you go and ask your financial advisor, tell him, I want Bitcoin ETF in my portfolio, they will be buying it. But based on the last week, now Morgan Stanley has told their advisor, now you can go and talk to your customer and say, hey, I've got a new ETF. I think you should have some percent in your portfolio. Now you can go and actually sell it. So Morgan Stanley, the first one to do it. We'll see how many institutions or how many financial advisors actually go and pitch for it. But the fact that now they're approved for financial advisors to go and talk to their customers, proactively, is a big step. We'll see what happens next. But I'm still bullish on this side. Any other questions on crypto? Where is crypto economy going? So let's look at CoinGecko. Where is Bitcoin right now? 59. I guess it's been like last, let's say 7 days. Not much change. It's been just bound. It's been a range bound 1 month. Still like between 65 and 55 is where it's spending majority of its time. So, but I think Yeah, institutional involvement is increasing, so that should bode well for Bitcoin. Okay, any other question? Company Mercado Libre. Yeah, this is the company I mean, we just reviewed Mercado Libre for their earnings, so you can you can just go back and look at this that recording. Mercado Libre is my
lot of attention on Nike after Starbucks.
Yeah. All right, so let's talk about some market moving news, and then we will jump into 13F. Or do you want to look into 13F? So basically 13F details are, maybe we'll do that. You can tell me which fund manager do you want to look for, and let's do 13F. So I spent a bunch of time in consolidating 13F across different fund managers. I guess I have now almost 75 plus fund managers. I really want to know, either you can go to different websites which have this information spread across, but I wanted to find a better way for me to just look at it and analyze it to see what the fund managers are actually doing and what are they doing with the stock that I'm holding, right? So I want to look at, let's say, Stanley Druckenmiller, what they hold in their portfolio, which are the biggest holds. So this will tell me the biggest holdings in, top 10 holdings of the fund manager, whichever I want to pick up, right? So Brad Gerstner, Altimeter, Snowflake, Bailey Gifford has got NVIDIA, Stanley Druckenmiller has got Coherent, he don't have NVIDIA. Second biggest is Coupang, right? It's surprising. I mean, I'm bullish on Coupang. I've talked about Coupang. But didn't know that he holds Coupang. Let's see who else holds Coupang, right? So I want to come here and say, okay, activity on my stock that I hold. So UPANG, Coupang. Okay, Bill and Melinda Gates Foundation, nobody added it. So who added Coupang? Brad Gerstner, he added 33.5%. Increase its position in Coupang by 33.5%. Okay, cool. Bailey Gifford increased its position by 1.63% in Coupang. Who reduced it? Stanley Druckenmiller sold 50% of his position in Coupang, and still it is 7.88%. So that is still fine, right? Still holds 7.88% of his portfolio is in Coupang, even though he cut down his holdings by half. Okay, who else have reduced? Looks like Maverick Capital reduced by 46%. I don't know about these fund managers. So you give me your stock and we can figure out what's the fund managers doing with your stock. So if I want
Nike.
Nike, NKE, oh sorry, Nike, 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 who increased his position by 190%. Okay, Chris Broomstrom, but it's a very small portion of his portfolio. It's like 0.45, less than 1% of his portfolio. Still not meaningful, but looks like he went on almost tripled his position. Every other fund managers, at least the 170 I have, actually have reduced. Tom Gaynor of Markel Group, which is basically also known as a mini Berkshire, he added barely, little bit, 3% increase, but still very small part of his position. Not too many fund managers actually have.
After that, Warren Buffett, Ulta, can you check Lulu? Because a lot of attention going on Lulu.
Okay. Yeah, so I actually have a data for, maybe, like I said, almost 75 fund managers. So now this is as of June 30th, right? So things could be different. Nike, someone could have bought it after June 30th because the Nike is down. So we will only know in next 13F. Okay. You says Ulta,
Lulu.
Lulu.
I think they are all down after July 30th. So I think
Yeah. So
this won't
after
come.
July, then it may not even appear. This is as of June 30th, right?
Yeah.
Only Giverny Capital added, and it's now part of 1.64%.
Palo Alto Networks that dipped before that.
Palo Alto. Maverick Capital, Stanley Druckenmiller reduced. Both of them had reduced. Let's look at the biggest one, Apple. I know Buffett sold. Oh, Apple, PPLE, Apple. See, there we go. A lot of involvement with Apple. Bloomstram increased almost again, just like he did with Coupang, increased it by 300%. Stanley Druckenmiller sold. Okay, Stanley Druckenmiller reduces Apple position by 80%, 78%. Warren Buffett reduces Apple position by 49%. Still, 30% of Buffett's portfolio is still in Apple.
What is the difference between negative 78 and positive 42?
I had to clean up the data. It's just ignore it. It's a coming from two different places. I think one place shows the reduction as negative, other one just shows it as a number. So ignore that. So who else reduced? 14%. This is anyway very small portion. So Berkshire Hathaway still has got 30% of his portfolio in Apple. Wedgwood Partners has got 7% in Apple. Who are the other big holders? I guess then others are like 6%. So who initiated a new position? Chu Associates initiated a new position in Apple with 6.67%. That's a little bullish. Let's talk about, and I think I just tweeted about it, Tesla. And this is where you see difference between saying and doing. Brad Gerstner sold all his Tesla position. He is like those friends of the pod, always talking about Tesla FSD. First time I heard about Tesla FSD 12.5 was Brad Gerstner coming and talking on CNBC when everyone had given up on Tesla, when the Tesla stock was down. It's a great company, 12.5 is amazing. And there's a difference between saying and putting their money. When it comes to money, he sold all his positions. Right? That's why it is, we should never, ever base our investing decisions on what someone is saying on CNBC, or for that matter, on any other financial channel. So this was actually surprising for me because he was so bullish on Tesla because he's in the same group of Elon Musk and friends. And I'm like, why the heck you sold off all your positions? Like 100%. Doesn't own any Tesla, right? So, and I want to look at, okay, what does he actually hold? So let's say Altimeter Capital, Brad Gerstner, right? No Tesla. I mean, what else he reduced? He's reduced Broadcom, Coherent. What did he add? Alphabet, 1.83%. Now Alphabet is 1.83%. Mercado Libre, he added a lot of Mercado Libre from percent wise, like maybe holding like 800%. So ignore that. But he considered it as almost as a new position. Mercado Libre 1.27. Amphenol Corporation added new. He opened a position in Apple with 0.85. Rubrik, Salesforce, Samsara, but Salesforce is as big as Mercado Libre, little meaningful, and added a little more to Uber. So now his largest position is Meta and Uber. Second largest is Uber. He's washed his hands off Tesla. So next time you hear Mr. Gerstner talking about FSD, Tesla. Question should be, should I believe your words or should I believe your money? So always follow, always follow the money. Don't follow the words. Okay, he sold all his position in Tesla. How about Li Lu? Li Lu is Himalayan Capital, right? Himalayan Capital. What did Li Lu? No change. 18% is in Alphabet and Alphabet Class C. Overall, if you add Alphabet, it's almost like 40% is in Alphabet, 6% Apple, 28% Bank of America, 15%. No change. And initiate a new position in Occidental Petroleum. He's like, he just follows whatever Warren Buffett has. And amazing thing is, no change. I mean, no buying or selling over last quarter from Li Lu. Any other fund manager?
Is Bill Ackman a fund manager or no?
Yeah, he is. He is. I have the data.
Bill Ackman is recently acting.
CKM, Bill Ackman. 2 new positions initiated. One is in Brookfield Corp, 2.73%. So this is meaningful. Any fund manager adding a new position with 1% exposure, I want to pay attention. This is meaningful. Nike, 2.2%.
I think next filing, he did a lot of Nike.
Yeah, so we'll probably
he
get to know
started
in
position in basically 2.2 beginning of that crash, and then he added too much.
Yeah, he added more after June 30th. We'll get to know. He sold 22% of his Chipotle. So did he know anything about Brian Nickel? Again, this is not a conspiracy theory, but he sold like almost 1/4 of his position in Chipotle. And now we know that Brian Nickel is moving out of Chipotle. Does it tell us something? I don't know.
It's a lot of politics. Everybody knows that.
I don't know. So let's look at Chipotle. What else?
Check Starbucks then, because then the people might be adding Starbucks before the Chipotle drop.
Okay, what else happened to Chipotle? No, I mean 0.19%, 0.06% doesn't pay attention. So I think the only one big fund manager movement was he reduced his exposure by 22%. What else? Monish Pabrai. I think he has Pabrai Investments.
Vivek, can you open all the tabs and check who added Starbucks before 30th June? Then he knows the news.
So Pabrai is all in coal. And he just added same. And I think reduced Console Energy. So this is Pabrai funds. I think they got only 4 all in coal. So the Starbucks, you want to look at Starbucks here, right? STAR.
But with all the fund managers.
Yeah, so this is actually all the fund managers who have any on Starbucks. So you got so Bloomstram is now made it to almost doubled its position, made it to 3.2%. So these are Markel Group added. It's now 0.44%. Who else? Giverny Capital added almost doubled its position in Starbucks and is now 2.35% of its portfolio. Nyanga says your spreadsheet awesome, start selling subscription. If you follow me on Twitter and ask for this, I actually put it on Twitter saying, hey, this is what I worked on. If you want access to this, just follow me and say smart money. And a few people have reached out to me and I gave a link. So if you want it, let me know.
Oh, I missed that tweet. I'll put that tweet. Definitely. Thanks.
Yeah. So yeah, so then you can run your own analysis of whatever fund manager. You want to look at a fund manager side, or look at top holdings of a different fund managers.
Or you will share the Excel sheet?
Yeah, I'll share it. If you're on Twitter, just follow and ask for it. I'll do it.
Even your stock analysis spreadsheet, that was awesome as well.
Yeah, that's something I'm still working on it. I'm not sure I'm gonna just share that for free. So
that's why whenever you decide for subscription, let me know.
Yeah. So yeah, which other fund managers you want to look at? We can look at the top 10 positions.
Amazon.
Sorry,
Amazon.
I didn't get.
They all dipped after 30th July. Oh, we have to check up before that. Okay.
Yeah, this is all Q2, end of June. Okay, so I don't know if there is anything else on 13F that you want to do.
Is anybody buying Baidu?
Baidu? Let's look at my stock activity and go to Baidu.
Chinese stocks are like Baidu or Baba.
Oh, BAID. Baidu. So who increased his position by 87%? Michael Burry increased. Oh, 12% of Michael Burry portfolio is in Baidu. So let's see. What else Michael Burry hold? Burry. Wow. 21% of his portfolio is in Alibaba. He's gone big on Chinese. This is as of end of June. Okay. 12% is in Baidu. So that add up, make what, 32%? JD.com is another 12%. So almost like 45% of Michael Burry is in China. And everyone else is saying China is uninvestable. I don't know. Should you follow Michael Burry or not? It's entirely up to you.
He is right most of the time.
So up to you to figure it out. Right. I don't blindly follow any fund manager, but at least when I look into this does give me, a little bit of information on, what's happening with the stock. Let's say Alibaba. Who else is in Alibaba? So, 4 new fund managers open positions in Alibaba, less than 1%. Aquamarine Capital, Guy Spear, this whole group of value investors, value investors are buying Alibaba. Fairfax, Prem Vatsa, I don't know about this Crescent fund.
Vivek, I saw David Tepper is heavily invested in China, Alibaba being number 1.
Okay, let's look at Tepper. I think I have a Tepper's one. David Tepper, Appaloosa. Oh my God. So David Tepper, 12% is in Alibaba. Tepper's.
Excuse me, other Chinese stocks too. I think it's David Tepper.
Baidu,
heavily invested in China.
2% is Baidu. 10% is in Amazon.
Nobody is focusing on EVs. I think the XPeng and Neo.
8% is Microsoft. So David Tepper, even though he reduced his holdings by 6%, still 12% is Alibaba. See, Neo, I mean, Neo sector has more of a retail investors. I don't think these are big enough.
XPeng, Neo is dead. Neo is dead money. XPeng.
Nah.
Nobody's.
PDD.
Pinduoduo. RV Capital has got 10%. David Tepper has got 4% exposure to Pinduoduo.
XPEV.
Oh, but this one is the name of the stock or the name of, it's not.
Oh, I see.
Neo, I only go Old Dominion. No.
Maybe the EV they own, like Li Auto. That's probably the biggest one.
I mean, Li Auto is the only one which is profitable.
Yeah.
Nope.
Nobody trusts.
I mean, these are more, these like Chinese EVs are more retail side. I think, forget about it. Let's say EV's perspective, even Brad Gassman is selling out of Teslas. The EVs, a lot of fund managers have kind of a sold on EV. If I look at auto, you got a Rivian Auto. That's the, let's see.
Check Rivian then. Rivian.
Yeah, what's happening on
After
Rivian?
it already doubled from 8 to 18.
But 0.3 for Bailey Gifford. Very small. I want to look at what Bailey Gifford has. NVIDIA, 7.88%. So let's look at NVIDIA. Because that's market moving stock. NVIDIA Corp. Lot of folks have sold NVIDIA. So Belly Gifford has got 7.88%. Stanley Druckenmiller almost sold all of his NVIDIA position. Almost 90% is sold. David Tapper sold 85% of his position in NVIDIA. And we don't know when these guys sold. This is the position as of June 30th, means let's go to June 30th, which is over here. They could have sold it off at 140, who knows? But this is their net position as of June 30th. And the stock has just reached where it was on June 30th. But looks like NVIDIA, a lot of big people have sold a lot of positions on NVIDIA. Does negative or positive reduce the same thing? Yeah, I didn't notice that some of the website actually shows the negative as a negative number. And I was working on today morning. I didn't have time to clean up, but it's the same thing. Lily, LLY, LI Lily. ELY, LI Lily. Tiger Global has got 3.89%. Poland Capital has got 1.24%, even though they reduced it by a little bit. Yeah, these are the two major ones. I think Mayors has 2.03%. These are the three big ones that we have. Ravi sir, can you check HRO? What's the name of the company? HRO. Or let me see if I can bring the, hold on. Let's add the ticker here. Let's do with the ticker. Nope, nothing HRO. No, I don't have any other one. So we were on Lily, right? LLY. Now I've switched to tickers. So you can switch yourself. I just switched from a stock name to stock ticker. Anything else? Any other fund manager you want to look at? Or what these guys did? So there are three sheets that I've created. One is which will tell you the top 10 holdings of the fund managers, that you want to focus on. So
AMD and SOXL.
AMD and SOXL. AMD. AMD. So mostly I've seen reduction, but yeah, no fund manager is too big on AMD, except David Tapper. He's got 3.6% of his in AMD. Tom Lee, I don't think fund strat I have.
ETF, does it track ETFs or no?
I mean, if it is on one of those 70 fund managers, I don't know. I think Whale Wisdom Tracker, other website does not.
Check SOXL.
Let's say I see another one, BA. Now, Hillman Value Fund added, initiated new position. Sorry, no change. Yeah, two big fund managers have BA. Tom Lee, does he have to report 13F? He's his fund strat, right? STRA. I don't think Tom Lee is there. Or if you know where it is 13F is, let me know. I will add into this. I don't have Tom Lee's number. All right. So that's all 13F. I had fun in trying to analyze this way. I know other times I used to just take a screenshot, but then I realized hey, I can do this is a much better way. Dave says you should put Power BI report on top of Excel. Yeah, I just need to get more focused on the Power BI stuff. I've not done that much. So limitation. Take two, TT. Oh, we do have some take two. 0.72. They added a bunch, but still it's like 0.22%. Tiger Global is on take two with 4.06%. And who sold off? Stanley sold off all its position in take two. Stanley Druckenmiller sold off everything on take two. So what is Stanley? What the heck is Druckenmiller up to? Oh, I think wow, too many of the positions. Ignore it. Let's see, only what did he reduce? Can I sort this? Sort it as what? Okay. So anyway, yeah, he's reduced. Let's say looking at 100. He sold many of his positions, completely got out of many of the positions. Boeing, we already checked, right? BA, not much of a movement.
This guy sold almost everything. What did he added?
Oh, no, he added other stuff also. So I just filtered based on what he sold off, right? So new positions. So Adobe 0.7. Let's look at only new positions then. Where do I have the two? I think maybe one website shows new, another one new position. Okay, what did he add? And he added big time is 2.16%. Camden Property Trust, 2.1%. Flutter Entertainment. I think this
Okay,
is online gambling.
he sold all the tech. He's out
Philip
of tech.
Morris. Yeah, he sold a lot of tech. Mercado Libre, new position. Yay, Mercado Go. 2.06%. That's a new position. Yeah. These are the big notable new positions. Avgo, Broadcom. AVGO, Avgo. One fund manager got a new position, Viking Global. Brad Gusner sold all of its positions in Broadcom. Stephen Cohen sold 67% of his position, but he's a 0.5% remaining. Cantillon Capital Management, 8.29% of his portfolio is in Broadcom. Nu, I'm not sure if Nu has a good fund, hedge fund following. Let's see. Oh, they do. Some has Nu on their portfolio. Okay, not a huge part. Bailey Gifford, okay, I'm not surprised. Okay, Maverick Capital. I need to check on Maverick Capital. This is the fund manager I've not tracked or never heard about it, but looks like they are getting into some new growthy business. Maverick Capital. Oops. MAVE. Okay. Okay, too many holdings. Okay, so new position. Wow, but this is like, it's too diversified. Maverick Capital has got hundreds of holdings. I mean, Stanley Druckenmiller, not Stanley or Stephen Point, they're like 5,000 holding. I only picked top 100. I mean, I'm not going to go through all 5,000. But this one has got a lot of holdings. Walmart, let's look at WMT. This is the last one. The Stephen Cohen added a little bit of it. MRK. Okay. MRK. No new additions. Yeah, I've not selected it. Only few reduced it, but Con Brothers, I got 12% in MRK. Anyway, if you need access, just ask for it on Twitter. I'll share the access to this one, and you can have whatever fun you want to have. I will, as and when I find a little more on additional fund managers, probably I will add it. And maybe I'll do this every quarter. All right, what else? Oh, we already passed 12, so wait. Oh, that's a good idea. Dave say, where is it on my website? No, I didn't have a chance to put it on website yet. I was just working it, adding a few more today morning, but that's a good idea. I'll put it on my website. I'll put it on my website and then share the link. So hold on to it. I'll add it on my website. This is my latest stuff that I worked on yesterday and today morning. So now what we got some earnings or some news. What do you want to focus on?
Earnings for next week, EL and Palo Alto Networks. Is Palo Alto Networks the P is right or?
Yeah, Palo Alto Network. I will look into that. Dave said, I'll put a Power BI. Thank you, Dave. Yeah, we can enhance it. All right, so gonna go for our earnings. I think I have a couple of earnings, not too much. Where's my earnings? I got two. Let's look at these couple of earnings. So we got Alibaba. The revenue was all good. Margins were pressured because of a lot of investment on the logistics side of the house. Number two, they had to this quarter they paid more on stock-based compensation, which wasn't the case last year. So that was a reversal, almost 6.9 billion RMB reduction in operating income because of that. So what else I saw? Free cash flow. Again, these all related to the SBC and the investment that they've done. Budget for AI is higher in this year. At least that's what the CEO had to say. And they're also investing in AI. They saw a lot of a demand from their customers. You get a similar vibe from Ed on Alibaba's call as you get it from Jensen or from Andy Jassy on Amazon call, that there's too much demand. There's too much demand of AI. We can't service all the demand. And that's what we heard from Alibaba CEO also. From a monetization perspective, this is the theme that I'm seeing every quarter. They are coming say we are making changes at our end to monetize the users better. And few things that they've done, they've actually doing three things. One is advertising. Another one was better user experience. The third one, I think was better pricing or something. I forgot. I have noted it down on my document. But again, what they are saying to analysts is you have to wait for 6 to 12 months. You won't see its impact right away. In this quarter, second half of the quarter is when those efforts will start to actually pay off from a monetization perspective. They have a subscription service called 88 VIP. I need to read about it. I just took a note saying I need to dig deeper, but now they're 42 million members, whatever that subscription service is. CapEx, there's a lot of unmet demand for AI, both for training and inference. We will continue to build capacity or for next many quarters because the return on investment on this AI is really, really high. They repurchase shares. So in 2.3% reduction in the shares this quarter, which is Q2, which is good. I thought probably they're doing more, but I think they are buying back more shares, but because they also reissued shares, so the net reduction was 2.5% only, which I guess in a previous quarter it was higher, but they issued shares. That's why I think this time you see a less reduction. Also, they have 26.1 billion remaining in share repurchase authorization. I like the company that they are buying the shares when the shares are down, when the shares are in $70, $80, and not buying the shares when the shares is like $100+, right? So I'm still bullish on Baba. As a company, I think still is doing good. And now they're buying back shares. They've been buying back shares every quarter. And I think that's what I want them to do. Just buy back the shares as long as they are below $100, right? And I'll not sell my shares. I'll hold my shares. So I have a more ownership of the shares because you're buying back shares from others. So that's on Baba. I don't have any concern on Baba. Again, monetization is something that we need to continue monitor it. Let's see how it appears in second half. But even if just keeps the revenue the same, keep on buying back the shares because it's still generating decent amount of a cash flow. I think it could be a what do you call a share cannibal. So share price should reflect those changes. So that's
Vivek,
yeah.
Apple had a share buyback when it was at nearest lows in 2013.
Yeah.
So it's like
that was,
they have buybacks, but it doesn't really the share the Apple share still went down, as we see with Alibaba's.
oh, that's fine. So the idea is Apple share going down could be based on what is happening in the market right now, right? But the buyback, if you buy back and extinguish a share, you make the remaining shareholders a little bigger owner of your company. And if the company's business, if I'm bullish on that company business for long term, yeah, I would want to be a bigger owner of the company. I'm not too keen on Apple buyback because Apple buyback shares every quarter, irrespective of where the share price is. Company should buy back the shares when the share price is trading at a lower than the value of the intrinsic value of the business. That's where the existing shareholders will benefit more. If you're buying back shares wherein your shares are priced at higher price than what your business is worth, because there's a meme crowd, or everyone is bullish on the market and the shares are overvalued. When the shares are overvalued, companies should issue shares and not buy back. Apple buy back every time as a standard one. So yeah, I mean, they have so much of a cash flow, so that's why I won't ding Apple. But if it is another company which is buying back shares when everyone is talking about the shares, when the share has gone up and probably overvalued, it is bad for existing shareholders. Alibaba is buying shares and increasing the buyback when the shares have been depressed. I like that. So
Vivek, also Jack Ma is privately buying shares, and then the chairman, I forget the chairman's name, he's buying, well, Jack Ma is buying Hong Kong shares, and the chairman is buying US shares. And that's
no, I saw. Baba stock is pretty good, drop from 300. Are not concerned with geopolitical issues. I am concerned. That is why I can't make it a bigger portion of my portfolio. I can't make it as a Michael Burry portfolio, right? He's got 22% in Baba. So I can't make that because I have a geopolitical concern issues, right? But it is one of from a business versus the current valuation perspective, I think it is one of the best opportunity. But I have a geopolitical issues in my mind, and that is why I want to position size it accordingly. I can't make it a huge position of my portfolio just because of our geopolitical issues. So last one is a C Limited. And let's look at C Limited earnings. Stock was up 11%. One thing on a Baba, after earnings, stock was actually down 2 to 3%, which was expected because all margins were, negative because of higher stock-based compensation. I actually That day I had to get up early because it's Chinese company. They reported like 5:30 a.m. Pacific time. I got up at 5 a.m. to listen into the Baba's earning call. And, the call wasn't that great. When you come out of a call as a shareholder, you feel, yes, the management's got it. I mean, it was like, okay. They all kept saying, you have to be patient on our monetization effort. I mean, things that I talked about. So I thought, maybe Baba will open up 2 to 3% lower. It's neither here nor there, not a big change. And when the market opened up, Baba went up like 4 5%. I'm like, what happened? And now I think Baba is like, after that, a day after that, it went up again 2 3%. So I don't even know what explains this jump in Baba. Definitely not earnings call, or maybe after a day, the street realized that it's not that bad. Who knows? But the call wasn't that, you won't see that the stock should jump 5% based on the earnings call. So C Limited, revenue up, gross profit up, margin, similar story like Baba. But before you dump the shares, the difference why the margins are low is because of higher cost of. There are two reasons. This is because of a higher cost of their C Limited had started fulfilling by like similar to fulfilled by Amazon. They have started a new service called FSB service, fulfilling by Shopee. And when you're trying to build a logistics service, you have to do a lot of investments, and that's what they did. On the logistics, they had a lot of investment. That's why you see operating margins were pressured, but I'm fine with it. Balance sheet is still strong. Adjusted EBITDA was 448 million, is fine. Quarter-on-quarter comparison, the revenue up 23%, which is great. Margins pressured. Over 3-year CAGR, revenues up 18%, 19%, which is fine as well. I think a few things that we should talk about it. Free Fire, which is their gaming platform, Garena. This is the most famous or most played game on their gaming platform. I'm not a gamer, but on every single day throughout Q2, Free Fire had more than 100 million daily active users. Gross orders were up 40%. What else? Their credit portfolio, they had a 4 million first-time borrowers on their credit portfolio. Their loan book is up 40%. They also provide loans. And they didn't take too much risk. They didn't take higher risk because their non-performing loans did not see any increase. So which is good. You're increasing your loan book without sacrificing the quality of the creditors, right? Good progress on their logistics service. 70% of the orders were delivered within 3 days, and the cost of delivering the order is actually going down. They talked about some new initiatives, live ads. So I think advertisement is the standard way of making money. So now they are also getting into ads, and they found that 1 in 4 active content creator is actually paying up for the ads. They launched change of mind feature in which you can return any goods if you change your mind within a certain number of days or 15 days. And they launched a new game in Taiwan. Guidance, they provided guidance that e-commerce will be positive adjusted EBITDA, which is market liked it because e-commerce have been kind of a negative. It's not Amazon had been negative on their e-commerce business for years together. So, but they guided that they will actually turn out to be positive, which is what market liked the fact. And they also revised up the guidance for GMV. So they revised it up, their GMV growth, plus they told that operating wise, we will be adjusted EBITDA positive from next quarter. So market liked it. stock was up 11%. So whether it was 11% better business or not, that's something you need to think about it. Overall business perspective, I think I'll still hold my shares and reduce the cost basis. My cost basis is right now $49. So started at 58, now at 49. I think I can still hold the shares. And wow, it's at 80. So yeah, I'll just hold the shares and reduce the cost basis. Once it gets zero, that's where my position is. Should take some profits. I have a call spread, I think at 85 to 90, a call spread, which is what, if it goes past that call spread, I'll probably sell some share, take a loss on the call spread. Otherwise, we'll get still is low, that will reduce my cost basis. So that's on SE, C Limited. Yeah, I only bought the stock, I think, in 2022. But this stock has been at all over the place. At some point of a time, I think it was during the COVID, it was 100 plus. It was 300 plus. Look at the trajectory. Right? It's a perfect pyramid. So I think I started buying it somewhere around over here or somewhere, 2022. I got out of all Chinese stocks since last year. You're a daredevil. No, you just have to keep your position size. I don't want to lose my sleep. That's why I can't be Michael Burry with 50% of my portfolio in Chinese stock. I guess maybe overall combined, all Chinese stocks will be less than maybe 5-6% of my portfolio. So yeah, I'll be hurt if suddenly, you block any Chinese stock investment, but I still survive. All right, yes, I think that is for today. 5 more minutes, I can hang around if you have any other questions. I hope you got something useful from today's session.
What are the factors you check for the stock to be a fair value? Is it a PE ratio, PS ratio?
No, so some of the stocks that I reviewed today, you saw me going through the valuation and see. So I'm not sure what's the fair value, but I'll see is the current valuation, what is it pricing in itself? Right. So
based on what, like?
Based on, let's say, free cash flow.
Okay.
And I'll see how much of a free cash flow growth is already priced in. Right. Then it will be the second question will be, do you think it can maintain that same free cash flow growth in future? And that's always half science and half art, right? Then it means you need to know all the business, what are they doing in future and all that stuff, right? So that's where I'll use, okay, what has it done in past? Have they ever grown it like so much? If not, is there any tailwinds for this business right now? If not, maybe then I'll want to give myself a little more room for error, right? And based on that,
one question, like you invest in companies that are not profitable, like the EPS is negative. Do you have any company that you have owned?
Yeah, so those are, so I have a companies where you have a zero revenue. Some of them are my growth companies. Some of them are what I call as a moonshot or rocket companies, right? 5% of my portfolio, I guess, is in those rocket ships. But
any of biggest one, which one is that?
Nanox is one, right? Which can go down to zero at any point of a time. Again, the question is your position sizing, right? So I have a Nanox. I think Pinterest is the one which I don't think still makes money, GAAP profitability. There are the companies that I hold which in the EPS may be negative. Snap, it's I'm a kind of a given up on Snap in terms of I'm selling covered calls. But yeah, I hold companies.
I see.
You just have to make sure that the position sizing, right? That's more important. If my position size is okay, right? Then I should still be fine.
Also, one more question. Do you
So-
believe that there will be a rate cut in September, or all this is fluke?
Market is pricing in that there will be a rate cut, right? I don't know what this guy Jerome Powell is in mind. I can't get into his head. So let me share you my distribution of portfolio, right, as of today. So 70% is on my core, which is like ETFs or companies which are like profitable cash generation companies like Apples and the Googles of the world. 70% of my current portfolio is in those companies. 4.1% is in moonshots, right? Moonshots, like I said, these are the ones where you don't know, they can go down to zero at any point of time.
So
Right?
is this account like 100%? Does it you use margin, or is it all yours?
This is my market value of my portfolio and how it is currently divided into
No, but
various stocks.
this is all your money, or you use portfolio margin portfolio?
I have a margin, but I don't know what it is. Let's say if I'm holding 10 or 15 stocks, this is how the distribution of the stocks is. So this is what it refers.
So my question is like, do you use margin or you don't use margin?
I use margin because let's say if I'm buying some shares, right? I got a more buying power still remaining.
I see.
But do I pay up for that margin? Probably not, because I don't maybe in one stock where I have a cash value negative because I bought some stock. Other than that, most of the time I don't have to pay up for. And if you look at a number of tickers, here's another one. Let me share this one with you. I have 29. I have 8 shares which fall into that moonshot. 29 growth shares and 20 looks like, oh, it's between growth and core, the number is same, 29. 8 shares which are in moonshot.
Almost 70 stock you hold.
Yeah, it'll be 60. I think one of the core will be cash. That shows up as a cash, so that's not a stock. But yeah, I think it's 69 or 68. Yeah, it includes all the ETFs, etc. Alrighty.
But one last question. So what if the Fed doesn't do a rate cut, or the same thing happened with Japan?
If Fed doesn't do a rate cut, I think market has already priced in, so we should see some market selling off, especially the IWM and the
Small cap?
smaller caps.
I see. So that index anyways didn't perform well in last 3 years.
That is because it's all focus because the rates have been high. So that index only performs when the rate cut happens. Once the rate cut happens, the stock has gone high, and then once they become a better business, they move out of that index. Like we talked about this anyway earlier.
And what does this people have a lot of concentration on Jackson Hole meeting? What does Jackson Hole meeting has?
So Jackson Hole, all the central bankers of the world come and meet in Jackson Hole every year in August.
So this week Wednesday is the Jackson Hole meeting.
Yeah, I don't know whichever. So in August, they come and meet where they talk about what is on their plan. So that's a meeting in Jackson Hole. Do you have an X premium account? I pay $8, but I think X also keeps on selling some other higher premium account. I don't know. But yeah, if that $8, yes, I do pay $8 for X. Your growth is in tech. I mean, probably there are others also, which I consider as a growth company. Let me see what's my growth. What are the tickers that I have in growth? Okay. Okay, well, just give me a second. All right, guys, if you Yeah, we're done for today's session. So if you want to drop off, you may. So let me share my screenshot of what I have called as a growth. Airbnb, ARKK, ETF, Baba, Baidu, Coupang, CrowdStrike, Doximity, DocuSign, Fastly, Fiverr, JD.com, KWeb, Chinese ETF, Li Auto, Mercado Libre, Magnite, Neo, Pinterest, Palantir, PayPal, Rocket Mortgage, C Limited, Shopify, Snap, Tencent, Teladoc, Tesla, Trade Desk, Unity, Uber, Xpeng. These are, I classify them as a growth. If is something wrong, do tell me, I'll correct. Okay, what do I have on a moonshot? Okay. Moonshot, crypto, ARKB, BlackBerry, Ethereum, ETF, FBTC. So basically, Jumia, Nanox, Square. Square, I think I should move to growth because now last 2 quarters, Jack Dorsey has actually taken control of the narrative on the company. He's now focused on rule of 40. So maybe let me make a change of moving it to growth. Okay, I changed it to growth. All other are, I still consider Jumia as a moonshot. It could go down to 0. The others are crypto. And Nanox is no revenue right now. That's why it is on growth. It's on the moonshot. Still hold RKT. It's above my cost basis, man. RKT has, and again, rate cut will do good for mortgage services. This August 16, I had a covered call on RKT, and which got called away, which is fine. A stock is now above, so the remaining portion is still beneficial. It is above my cost basis. And Fed cutting down rates will increase refinancing, which will be good for mortgage servicers. And that is why I didn't sell any covered call. I was so tempted to sell another covered call yesterday, but I was like, let me just wait for this Fed rate cut. But it is above my cost basis, so I'm willing to hold it. On what platform do you hold my crypto? So these are the, I mean, these are, I think ARKB, ETH, FBTC is on my, I mean, these are ETFs. You can hold it any brokerage firm. So I have it on my brokerage platform plus, some on my active accounts. Some of them I have in my retirement account. I think ARKB I have in my Roth IRA. So it's a ETF. Wherever you buy a stocks ETF, you can buy these. These are not really actual crypto, but these are the ETFs. So crypto, I have an account on, should I talk about it? Because you see a lot of scams going on crypto. On Coinbase. Okay, crypto, I have account on Coinbase, but I don't keep much over there. I use hardware wallet. Sold coin call the first time. I actually have bought a collar on coin, sold a put spread, bought a call spread when we had the Japanese yen stuff. And right now that is profitable. All right. I guess that's it for today. Thank you everyone for joining in, and we'll come back next week. I think with the earnings season now almost over, so I will switch back to review a company. As you guys know, I had a dipping the toe position in Arista Network, so I started building my investment thesis on it. I guess I'll have a document ready by next week. So I will review Arista Network, their business, competition, etc., and and whatever I find in the market. But I do want to review a company now. We are at a finishing of earnings, so we'll have time to spend something else, I guess. All righty. Bye everyone, and thank you for joining. We will talk again next week.